fundsupermart.com.
Can you briefly walk us through what the private retirement scheme is and why it is formed?
I think when the government voted this idea of private retirement scheme, essentially is to complement what we already have in the EPF. There are some statistics that has shown that the life expectancy of Malaysian public is getting longer. For guys, it's like 71, and the ladies are 77. And most of these guys, when they retire, they also exhaust their retirement fund fairly quickly. Okay, so in addition to EPF, to a lot of people with such high inflation scenario, it's actually not sufficient for them to sustain. Say after retirement, they live another 20 years. They need additional source of income. I think that's the thinking behind it.
Should EPF investors continue to withdraw their EPF savings for investments or contribute to the PRS?
Existing EPF investors who are happy with what they're getting, which is the 5% provided by EPF investment, I think they should stay there. But for those who want a different flavor regards to their investment objectives, investments, the risk appetite and all that, they can consider put some of the money in PRS, or even allocate more portion of their savings from the salary, and investing into PRS. Because PRS is voluntary, it allows you to invest in, take more control of your investment. You can choose different providers, different funds provided by the 8 providers, and it allows you to take more investment risks for higher returns over the long run. For individuals who have just gone into the workforce in their early 20s or the mid 20s, that provides an option for them to maybe enhance the return of their retirement fund, beyond the ordinary returns provided by the mandatory scheme.
In your opinion, how will the PRS change the landscape of retirement planning in Malaysia?
Definitely, you encourage more activities among the fund managers. There is additional source of, I would say, assets under management for the fund managers. And it will also impact the investment process of the individuals. So if the contributors or the Malaysian public who subscribe to the PRS will have to be a little bit more active in managing or selecting the private retirement funds. In the past, if you were to contribute EPF makes a call. They take full charge of the investment, so they decide where the money should be invested. Because the pool is so huge, it's quite difficult for them to achieve a very, very high return, because it's not easy for them to move the investment around. So 5% return for such a big pool of money is already very, very respectable. But for an individual who wants to take more control of their investment, they might want to move some into PRS, and by doing so, they are actually taking control of part of the investment. Not fully, because they still don't invest directly into fixed income or equities or anything. But they have to choose the right fund managers and the right type of funds. And each fund managers, each provider has got their own strengths and weaknesses, I guess. So I think before they decide to put the money in PRS, they have to ask themselves a few questions. They have to do some homework regards to the provider, the kind of funds offered by the providers, the characteristic of the funds offered by the providers in terms of its structure, in terms of its return expectation, in terms of its the kind of investment risk the portfolio is taking.
Can you walk us through the key features of the Hwang PRS core and non-core funds?
In Hwang, we believe investment should be simple. So if you look at the core funds that we have, this is mandated by the regulators, Security Commission. So we have a conservative portfolio, which is a 100% Malaysian fund, investing only in Malaysian assets, mainly in fixed income and money market. And we have a balanced fund, which is not constrained. The portfolio can actually go offshore, investing in overseas. Essentially, the asset allocation for this moderate PRS fund is almost 50-50. 50 equity, 50 fixed income. The aggressive one allows us to invest up to maximum 70% in equities, and it's also not constrained in terms of geographical exposure. You can go 100% offshore. But all these funds, whether it's aggressive, whether it's moderate or conservative, it always has got a very important features to it, because these are PRS, these are contributors' retirement money. The capital preservation criteria is chief in the mind of fund managers when they invest in it. I think a lot of contributors or potential contributors might be wondering, keep asking the question whether the return is guaranteed or not. The answer is no. You're doing this voluntarily, so you're taking the investment risk and taking the investment return as a whole. And the last fund is the PRS Sharia Growth Fund. That's a non-core fund that allows the unit holders to get exposure in Sharia compliant investment. And this is a 100% equity fund.
What should investors consider when selecting a Hwang PRS fund?
The first question they have to ask themselves is, can they take risks? How much risk can they take? Essentially, regards to risk, there are two things that I want to mention. Most people look at risk as in risk tolerance, but we would like to break the risk tolerance part into two, as in risk capability and risk tolerance. A person may be very tolerant to risk, but they are not capable to take it. I just give you a very simple example. Somebody in their mid-20s just started work, maybe extremely risk averse, maybe from family upbringings or the teachings from the school and all that, they don't take a lot of risks, but his capability to take risks is actually very high, because it's very young. If he fails, he can always come back again. Versus somebody in their 50s or 60s, and they don't have a lot of nest egg set aside for their retirement. They may be very, very gung-ho and very aggressive kind of personality who likes risk, but they are actually not capable to take too much risk. So risk tolerance is high, but risk capability is low. Whereas the earlier one, the 20-year-old guys, risk tolerance is low, but risk capability is high. So the risk factor, each and every potential contributor should ask themselves first, assess their risk capability and risk tolerance before they move to any of the Hwang's PRS fund. Also, risk and return are corresponding to each other. The more risk you take, the higher investment expected return you expect. So they should also ask themselves if their investment return is only slightly above fixed deposits, then they should just be looking at a conservative fund. But for somebody who is looking for equity, right, like kind of return than maybe the aggressive funds. So the investment objective is one thing, the risk tolerance, risk capability. Investment horizon is another factor, okay, but I will presume people who invest in or contribute to PRS have relatively long investment horizon. I think at least about 5 years and above, even to the extent of 15, 20 years. So I think these three factors are very important. And also, the other thing they should consider is the moment you put the money into PRS, okay, you will stay in PRS until the person reaches 55 retirement age, okay, and they can only take out 30% after first year of investment in PRS, and the 30% is also subjected to a 8% tax penalty if they take it out. Okay, so all these things they will have to consider. If I were to contribute to PRS, what's the optimal quantum? How much they can afford to invest versus how much they are willing to lock their investment in until they reach 55.
What differentiates Hwang PRS funds from other PRS providers?
I think I have briefly mentioned a few of our features and philosophy. We believe PRS funds should be very simple. Okay, it shouldn't be complicated with a lot of embedded options and all that. We are also known to be absolute return fund managers. We try not to benchmark our investment too much to a certain benchmark. Okay, our investment style is very active. If you're bearish in the market, we raise a lot of cash to protect the capital. Okay, so we don't take pride in beating the benchmark. We take pride in delivering returns, delivering absolute returns. I like to think that our investment philosophy is quite different from the other players in the market. And, yeah.